Question: will Congress finally pass an infrastructure plan
this year?
This year?
No.
Why not?
Well, hell, they're still arguing about the debt ceiling and all that kind of stuff. If I were a politician, let's do this. I'm going to put a Democratic hat on. If I was a Democrat, I would wait to try to push in through the infrastructure until next year, because next year is a midterm election year. And if I wanted good news to try to revamp, and I don't think either party is smart enough to understand actually what's going on with the inflation and how much they're responsible with Fed policies and the whole screwed up area up there in Washington. But when you have people hurting and the inequality growing, and it's going to continue to get worse because you have higher prices and stagnating wages, you need something to point to when you're closer to election, not further away. So if you pass it now, you're playing your hand first, in my opinion, to get elected, because you want to be able to point to that and how good you're doing right now when you want them to go vote. So I don't think either one is serious about getting an infrastructure bill this year. I hope I'm wrong for different reasons, because macro-wise, there's a lot of things that could be good from that. No, I'm rambling. Stop me, Frank. Short answer is no, not this year, because it's not politically motivating.
They're dying to pass an infrastructure bill right now, the Democrats, because only $400 billion is really for infrastructure. Everything else is for them, right? So those numbers are broken down. It's $400 billion. And I'm talking about power, roads, bridges, public transit, airports, freight. You can look at the numbers. That's what's going to infrastructure. Everything else going to social programs, a lot of bullshit. Some of it's going to nuclear or whatever. There's different areas, but they want to pass it because that's going to give them a lot more power of all the people that donated to them that wanted them to fund all these industries. So they wanted to pass it right now. Forget about that. Forget about what side of the aisle you're on, because both of these idiots on both sides of the aisle wanted a $1 trillion infrastructure plan, which seemed like an enormous number when Clinton and Trump were running. That was enormous. Now it's $3.5 trillion. Everyone's like, oh, okay, that's cool, right? Who cares, right? Doesn't matter. Where's the money coming from? Nobody knows, right? Taxpayer, it doesn't matter. Forget about that. I could tell you this one thing that's not being mentioned anywhere, and mark my words on this, because I feel as strong as this as I felt like when the markets are going to crash at COVID. If we pass this infrastructure bill, I suggest, and you'll see this happen in my portfolios, we are going to start dialing back on a lot of positions, because we are going to see inflation beyond belief, worse than what anyone thinks, forcing the Fed to immediately raise rates. Taper, forget it. Tapering, they stop, but no, immediately, because we have massive inflation right now. If you're looking at the whole supply thing, the supply chain, which I'm covering in detail and have great sources, this is a late 2022 to 2023 problem right now. Hey, I recently read, if you have the Curzio Venture Opportunities newsletter, I covered, I think it's 7 or 8 leading CEOs talking about this over the past 2 weeks of the supply chain issues, and thought it was going to be fixed right now, and it's not. If you throw the infrastructure, how is everyone going to get the materials? How they're going to get everything? They're already the huge bottlenecks. You can't even get cars. You can't get anything right now. The labor shortage that's going on is incredible. You saw FedEx. We'll cover that in a second to see if that's a buying opportunity. It's actually, the numbers were great, but the cost went up tremendously because salary was up 27%, fuel costs up 50%. I mean, what the fuck is the Fed doing? Do they see what's going on? Do they see this? Because you should be raising rates immediately. If you throw on top of that the infrastructure, it's going to be throwing gasoline, kerosene, pick whatever flammable you want all over this inflation thing. It's going to go through the roof, which means assets are going to really surge. But then you're going to see a very, very big sell-off, because a lot of credit has to come out of this market. We have to slow it down. I mean, guys, the people who are talking about this aren't in circles like you are. They don't go to restaurants a lot. They don't talk to their friends. They don't see what's going on. They don't see that you're waiting 40 minutes to eat something that usually takes 20 minutes. They don't see that the labor shortages, the signs on the doors. These guys hang out with rich people in rich circles. They're not seeing any of that. But what does that mean? A lot of companies are operating at 80% capacity. Their costs are going up tremendously. Food costs, raw materials, everything is going up. Labor is going up, right? And they can only operate at 80% capacity because they can't hire anyone. So if you can't hire anyone right now, and it's a huge labor shortage, what are you going to do? You have to raise prices, and that's what we're seeing right now. I mean, you're looking at FedEx raising prices. Before they reported this yesterday, they said they raised prices by the most percentage basis in 10 years. I mean, you're going to see, if you look at the numbers, even with FedEx, they said, which I thought was interesting, how across FedEx right now, more than 600,000 packages a day are being rerouted. They don't have 600, more than 600,000 packages a day are being rerouted. That's what they said in the call. So they have a $450 million year-over-year increase just in labor costs. Fuel, I don't understand. I don't know why they're not freaking hedged like everybody else in this industry and anybody who has a fleet. But, for me, when I look at this, if you see Congress pass this, mark my words, you should be dialing back. You should be scaling out of positions and lowering, because you are going to see the market really, really come down, especially risk assets. At the beginning, when this inflation really starts taking off, you're going to see home prices go up, asset prices go up. That's okay, right? When you have inflation, that's what the Fed wants. The Fed's really going to get what they want if they pass the infrastructure bill. That's my warning.
I like that. That's a good warning. Yeah. So so we get out of some stuff, and then where does that money flow? It would have to, well, it doesn't have to, but we would probably recommend a lot more commodity plays. We would recommend a lot more hard asset plays, because you can't just go hide out in cash when inflation really takes off. And I'm not saying that's what you're saying, but think about that from an investor standpoint. You don't want to hide out in cash when inflation's going through the roof, because you're going to be losing money hand over fist. But you're right. There's going to be a lot of what we need to prepare for, in my opinion, is this new normal going forward, because inflation is not, Frank, I don't even want to say your favorite word because it sets you off, but I love it. Inflation is not transitory. That's a drinking game right there, I'm telling you.
Let me ask you a question. How can inflation be transitory? How can it be transitory if we are going to have a supply shortage that lasts through 2022? It's impossible. We're going to see higher inflation over that time. So transitory to them could be 18, 24 months. It's transitory means like 3 months by definition. Maybe you go 6 months. Very, very short term. They're not projecting that inflation to go up that high next year. And there's no way inflation goes down if you continue to have this shortage, and you do. If you're looking at the shippers, you're looking at the builders, you're looking at, it's getting worse. They're lowering their numbers for third quarter, and they're starting to lower the numbers for fourth quarter. This is supposed to be bottoming out in Q2, and it's not happening. I told you, Ford, GM, the CEOs are on TV lying to you, talk about their EV portfolios, because they're going to have to freaking report 40, 50, 60% declines in production. It's going to happen across the board. Everybody sees it. And what's going on right now is there's a bid. There's bidding. So there's a limited supply of containers, and the biggest companies have the most money, and they're willing to overbid, which means other companies are not going to get their supplies in time. It's why you're getting golf clubs in 6 months, your mattress in 7 months, why you can't get a new car with your specs. Just what your color is going to take you 9 months. They'll say it's 4 months, but it'll take you longer than that. This is a problem that's not short term. They haven't figured it out yet. It's very difficult to say, okay, produce more of everything and more container, because then I look with Taiwan Semi in 2017 when crypto went nuts and they needed all, the chips and stuff like that. They started making a lot of money off it. Then they overproduced and the market crashed, and they're like, shit, now, it hurt them. That's what companies are afraid of. They'd rather have this problem be able to generate profits than just and it has tons of inventory. So it's not going to fix itself right away. It's something that I feel like it's not a big issue. People talk about supply chain, but they still think it's going to end pretty soon. It's not going to end soon, which means you're not going to see inflation slow anytime soon. It cannot happen.
No, and we talked about this months ago. The definition, it'll be transitory because all they got to do is get through the year-over-year comps. And then once it's sky high, but hey, it's not too bad compared to last year how it was sky high.
Yeah.
And that's going to be their review. Well, they're going to move the goalpost like it, And another thing we've talked about, you're right, it is impossible not to have inflation, because anytime you dump and create more money into an economy that's not created by entrepreneurs, it's not created by generating wealth and services, anytime you dump more money into an economy and you can't increase the supply of goods, you simply have more money chasing the same amount of goods or less, and you have higher prices. The new normal is going to be, hey, people are going to have less money, because at some point you think the stimulus has to taper back, and it already has, and I'm talking direct checks and things like that. And yet you have wages suppressed, other than people just trying to get employees, but you have cost going sky high, like you said, fuel and everything else. That we're transitioning into that period, Frank, where I think what's good for Main Street is not going to be good for the stock market. And that's a big deal, because if things do get out of hand and then Main Street starts to recover a little bit, everybody's going to have to pull back. That's not going to be good for the markets. There'll still be pockets to where we can find great opportunities, but you're going to have to be a lot more nimble, and you're just going to have to get to a new expectation level and a new normal.